Good morning and welcome back to another pipeline trading video. So today I'm going to talk about what's going on in the markets and what is going to make the market move either up or down. This is not financial advice. This is educational. This is giving you opinions on what to be looking out for, to not just be stubborn in one bias, because right now the markets are looking bullish. We have a change of character. We broke structure, 10s above the 20, prices above the 50. Everything is really bullish. And we actually got a V-shaped recovery, which I was not expecting. I was expecting for us to get the liquidity and then to come make our next leg back down. Now, a thing that I want you to think about is the saying of markets can be irrational longer than you can be Sullivan. The reason I say that is nothing's really changed. So the market's on at an all-time new high. You have the ceasefire that stopped. You have all the drama in Iran back up, right? The Middle East and the Iran tension plus the Strait of Hormuz is the number one macro story going on right now. Markets are reacting to changing headlines around the U.S. and Iran talks, ceasefire uncertainty, shipping disruptions. So why this matters is very simple. If tensions rise, oil spikes, inflation fears rise, stocks pull back. That's typically what would happen. If you're saying how far of a pullback can we get, regardless, we had our first red candle yesterday. So go do your homework on the first red candle, because it's pretty fascinating. Typically, that means the next 3 days we should get a pullback. And if I look at this, it should be anywhere from 2.6, 4.23, or we come back and we still haven't tested the 50, right? And that's going to be, so we could still see a 5% pullback and then make our next leg higher, right? So that's what I'm watching for right now. This is not a time to be, in my opinion, barreling into the market thinking that everything is great and we're just going to keep going. Typically, you could see back in my charts, whenever we break character or break a structure, it comes back, retests, shows its strength, and it continues to make a higher low. So I'm expecting, if this is a bullish market, for us to go up, pull back somewhere around here, same with here, right here, and then make our next leg higher. And the other thing on where this would fail, what I just mentioned, is if the tensions rise. Because right now, the market is pricing in diplomacy improvements. That's what you're seeing, this relief rally. But another thing to keep in mind is oil's prices are near 95. So oil remains elevated because of the geopolitical supply fears. Again, higher oil hurts consumer spending and pressure on inflation. So you have airlines, you have the transportation sector that will equal weakness across the board. Tech is wobbly if yields rise. So watch the yields. But energy stocks should do really well with these prices. Now, the third thing to keep in mind for the overall markets is we have, I believe it's today, Kevin Warsh. So he's a new Fed nominee. And what you want to be looking out for is, what's he saying about future rate cuts? What does he say about Fed independence? Is he going to be someone who's going to be independent or lean more towards whatever the president wants? Because one should not have anything to do with the other. It can't, because the federal Reserve is actually not a part of the United States. It's not a part of the government. A lot of people don't know that. Inflation stance, you know, if inflation rises, are they going to potentially put rates up? That's something that could happen. And it's happened before in the past. And then balance sheet tightening. If he sounds hawkish, yields will go up, and that will put pressure on the Nasdaq. If he's dovish, there's a potential tech rally. The fourth thing on why we're seeing the market go up, and this is actually bullish, I guess you would say, for semis, cloud, the mega cap tech, is Amazon's announcement of that massive investment they made into Anthropic. So this is reigniting the AI trade, and that supports the Nasdaq, going up, and it helps sentiment offset war fears, right? Because regardless of what happens there, AI is not slowing down anytime soon. The other thing to also watch for the market, the overall market, and we're going to see moves coming, is we have the S&P at all-time highs. So bullish momentum still intact. The bull market is vulnerable to sharp corrections if bad news hits, and valuation stretch. Keep in mind there are earnings, okay, to come very shortly, and some I believe are today. We have Tesla, we have Alphabet, we have Intel, we have these are like some of the biggest tech names. So stronger earnings will equal market fuel, right? Misses plus high valuation, we should get a sharp sell-off. So if I'm just looking at the charts, I think we're going to get a bit of a sell-off, like I was saying, 2 to 5%, somewhere in this vicinity, to just see where the structure is, where the support is, where the market believes the pricing should be, and then we'll see what happens. So again, just to reiterate, bullish scenario, Iran headlines cool down, oil falls, war sounds dovish, earnings beat, S&P and Nasdaq likely to rip higher. Okay? Bearish scenario, we have the conflict escalating. Oil breaks higher, war shoes hawkish, earnings disappoint, fast sell-off, especially in tech, and it will be risk off. If we go to Bitcoin, Bitcoin is bullish right now in a bearish flag. Nothing has changed. We broke structure. We had high liquidations we were talking about at the 76,000 mark. We have a fair value gap at 80,000, which is most likely where the next break is going to be, where we're going to see the most resistance. What's interesting is, remember I said, the longer this goes, we could see higher highs, but still be in a bearish flag. And we still could break down to the downside, right? It's just a matter of when. So keep in mind, markets, if you remember that saying, markets can be irrational longer than you can be Sullivan. Meaning, if you were to put a short here, and let's say you're using leverage, this could just keep chopping and bleed you out because you have to have enough capital and patience to hold. How much conviction do you have in your thesis? That's really what it comes down to. So the fair value gap is actually at 80,000. The top of it is higher, I believe, 80,000, almost 81, right? What's interesting is if you look over here, this is where we broke character and made our leg down. So typically you do see a retest to where it broke. And if it fails up here, which is interesting because this would be close to the top of this channel, we should get our leg down. So that's what I'm anticipating. I would be building again into my short position and adding over here. because I believe that we're going to go down. But I'm also playing it very tight because like I said, I can be wrong. You don't ever want to be 100% stubborn to what you think and what you want to happen, or because of what you believe to happen. You have to be able to flip from short to long and long to short in a blink of an eye. There's times where I've been short and down and okay, I'm wrong, and then go long and make all the money back on that loss plus some. So don't be stubborn in what you're believing, because you can be wrong. The markets can prove you wrong, and they will prove you wrong if you're stubborn. And the only thing that I'm watching here that I have to see is on the weekly. I want to see what this week plays out like. Right now, last week, we got rejected at the 20-day moving average. So that's not like, everything is still bearish in my eyes, because it's still this is a bear flag. So you can see here, let me draw this in. You can see here, we're going down. So this typically goes like this and then makes its leg up. This is bearish and then makes its leg down. That's typically what should happen. This is still a bear flag. So remember, just like I said in the last chart, any bad news that happens, you could see this whole thing get wiped out. Look at this candle right here. We went from 1 week, we went from 80,000 to 60. So don't think that that can't happen. It can happen in 1 week. Look at all the liquidity down here. Look at the fair value gaps. Now, it doesn't mean it's going to happen 100%. There's a lot of bullish things here. We are holding above the 20-day. We are holding above the 200-day moving average as support. So there were a lot of people saying that if this curls and turns, that we could go get our blow off top that we did not get, which could put Bitcoin at above 150. We could see 200. Again, nobody knows how high it could go, but we could get a massive blow off top. Especially, the other thing that I always try and remind myself is this isn't like the old times. We have Fidelity, we have BlackRock, we have Vanguard, we have some of the biggest institutional money putting people's 401ks. Pension funds are going to start putting exposure. You have sovereign wealth funds that are putting 1 to 2% exposure into Bitcoin. And I believe there could be a supply factor, like a shock. There's only 21 million coins that will ever be made. Now, what's interesting is the whole thesis, there's a conspiracy out there that the CIA created Bitcoin because they knew one day that the fiat currency would collapse and the petrodollar would collapse, right? Look at everything going on in Iran with oil. There is a massive amount of oil. There is no shortage of oil. That is BS. There's plenty of oil to go around. That's the big scam behind it, right? There's been a lot of oil and they keep the prices, they don't let them go too high because it will just drive the prices down and they're not making as much money. That's the whole game. It's like the diamond industry, even with gold. Gold's more valuable in the ground. They know where gold is. There's a plethora of gold available if they wanted. Keep that in mind. Like, there's a story and there's bigger things happening behind the scenes that you're probably never going to understand because you're never going to know all the details behind it. but it's not black and white like we think. So let's see what Bitcoin does. Right now, it's still bearish, but temporarily bullish in the short term. So we could go all the way up. We could, if we break above and hold. Let me get this exact number. If we break above and hold above 77,522, we should then go and test 80 to 85,000. If we break above there and everything curls and price breaks above the 50 and goes, then yeah, we're going to see 98, 117. And it might be that's it. That's all we do see. And it doesn't go higher, or just things are really good. And the reason I'm also thinking like this too, in the back of my mind, so I'm not stubborn on, hey, this is only a short play. I could be wrong, right? And I'll have to cover on my short. And I've also been selling calls. So I do have long exposure. Keep that in mind, guys. I talked about that in my last video. But there's a chart out there I would advise everybody to go and look up and read. It's periods when to make money. And I believe this chart dates back all the way to 1875. And if my memory's correct, he was a farmer and he put, years in which panic have occurred and will occur again. This guy called things like in 1927, 1945, 1999. He was a little early on COVID because he did say 2019 something would happen. So it did theoretically start in 2019, but the chaos happened in 2020. And he's saying the next event would be 2035. Now, in this chart, though, it also has periods of good times, high prices, time to sell, and there's value in all sorts of things. And then there's another part of it where it says years of hard times, low prices, good time to buy stocks. It's almost like what Buffett says, right? Be greedy when others are fearful, be fearful when others are greedy. So what's interesting is he's saying the years of good time and high prices to sell is in 2026. That's the chart. That's what it says. So I'm thinking, okay, there are valuations on the high end. We could see a blow off top and something happen. And this is a year that we get in and it's time to get out. Also, keep in mind, we have midterms. So theoretically, midterm years are bad. And then after the midterms, a lot of people put money in because there's more certainty on, who's going to be the next president, what the policies are going to be, and so on and so forth. So keep that also playing. So as you could probably tell by now, there's a lot of things that I'm thinking about that I have written down that I'm watching to see what plays out. I don't know what's going to play out first or how it's going to play out. That's why I'm looking at the charts. I have things and plans put in place if A, B, and C play through, right? And that's what you should be doing as an investor. Don't always just have one bias. Look at both sides. Always be looking to see, okay, what if I'm wrong? What's the other, thesis out there, right? You don't want to be stubborn. I know, and I've been stubborn in the past before or believing certain things, and then you get proven wrong. And people will prove you wrong. People will do things that, hey, you think one thing and something else happens. So keep all of this in mind. Don't just stay to one bias. And it's also good to hear other arguments because they'll either give you more conviction in what you believe or not. And you'll go back to the drawing board to see what am I missing here? ETH is very bullish right now. We broke above, we're holding above. And the other thing too that I'm seeing here, and where we could get a massive run up like Bitcoin, where we could see a 26. I did say we could go to 24 and we did, and it pulled back. Now it's holding. This right here is a cup and handle, guys. Cup handle. So a measured move would be right here, break above the cup, or actually it's right here. This is the handle part. Sorry. Thinking of bear flag. It could chop, and you typically the middle of the handle is where you would do your measured move from the cup. And this is saying that, you know, a measured move, if we continue to go in this pattern, could take us to 27.75, right? For me, I just dumb it down. I don't hold on to that. My next level for it to hit would be 26.38. That's what I'm expecting, because we broke above the 50. And the only other thing is the RSI is curling down. We're getting rejected. We're getting overbought. And it wasn't completely overbought, but it was getting there. Where did we get to? We got to 65, right? So again, this is another thing that I'm looking at. We're going to go back in this pattern, because if I look at BMR, and the reason why I look at BMR is because I feel as though it front runs ETH. It kind of tells you what's going to play out ahead of time. And this is showing that ETH probably is going to pull back more from where we are. That's what I'm looking at and why I look at this. But at the same time, 10's above the 20, prices holding above the 50. That is temporarily bullish. So keep that in mind. Right? That is temporarily bullish, and we could see a run up, and that would take BMNR to go to 27.77, which is a fair value gap. But I think it would shoot over the 200-day, because there's also order blocks up here, and we have gaps. And again, this would be the same story from where we broke down from 26.74. That's where we could head, or what we could do is pull back, get a secondary test. This is all accumulation. This is actually all very good that we haven't broken below. Sorry, I meant to be on ETH. This is really good that we're getting this. And if we break below, we might get our secondary test at in the low 19s. That's good. I mean, this is all accumulation. We might not get, some people were saying, we could go down to 1100 or 1300 ETH. My target for that was around this zone, 16 and change, because this Fibonacci level, which was the 0.78, held. You can see we touched it and went. That's a very, very strong Fibonacci, and it's very bullish for a good bounce. Now, I'll leave you with this. Last week, I talked about how HIVE had a 30% upside. So we're getting there. We held, if you look right here, this is on the daily. We held the 20-day moving average, which is super bullish. Typically, when you break above the 20 and this crosses, price isn't above the 50 yet, but it did here, pulled back, held this as support. This candle's super bullish. So that's what I was saying. There's 30% upside. We're 9% away. So since the video, we're up 19.25%. Sorry, that's wrong. If we are up, take that back. We're up 8.28%. And we have another 17%. Well, sorry, no, my math is off. We're up 8 and change. we have another 9%, and then our target was hit. That would be a total of 30%. So erase everything I said at the beginning just to give you some more clarity. I was talking about a 30% once we broke out of this, because this is bullish. You see how this is sloping downward. This is descending. Descending is opposite from a bear flag. Bear flag is up. Descending is bullish. We broke above. We held above it. I was saying from here, we could see a 30% move if we get above the 50. We did get above the 50 in a big way. So 30% was over here. And I was saying if we break above the 50, we're going to go to the 200-day moving average. So from here, we have had a 8% move since that video. We have another 8 to go. And there's a target. So we'll see what happens with HIVE. HIVE is moving clearly off of a few different things other than Bitcoin, but I think they just did a massive fundraiser, $75 or $100 million worth of equity that they raised for their AI and their data centers and that push that they're doing. But this is very bullish. Same thing. And we have a lot of fair value gaps. So I wouldn't be surprised if this comes back, tests, and gets all the way up to maybe 4 and change. Doesn't surprise me. I've traded HIVE a lot in the past, and I caught this entire run. The only problem is I never sold up here. I wanted to wait for continuation and see if it broke the 50. The moment we broke the 50, I was out. So I caught this leg here. And that's part of trading, right? Because this is very bullish. If it would have held, you could see there's fair value gaps all the way up here. And that's what I was waiting for, to see if that happened. So keep this in the back of your head too. There could be a good trade here or a swing trade if you're interested in HIVE. And that's it. So like I always say, stay patient, trade with intention, and God bless you all. Key things to watch for today: oil price reaction, 10-year yields if they rise, Nasdaq versus S&P relative strength, Iran headlines, Tesla big tech movements. If you like this content, please support the channel, comment below, subscribe, hit the notifications, and God bless you all.